Extensions are Fibonacci ratios that fall outside of a trading range. They are also used to forecast price movement outside of a range. They produce areas of high interest, and they can be used to identify market reversals. First, we need to cover ranges, ratios, which are Fibonacci retracements, and then we'll look at extensions. A range is created when price makes a high and a low, and then consolidates within that range. Fibonacci ratios and retracements fall between the high and the low of the range. These are areas where price is likely to check back to before exiting the range. Once price establishes support or resistance within the range, it moves outside the range towards the extensions. Let's put all these phases together step by step before we move on. In this scenario, we have an up move, which creates a range. Now that a range is established, price will retrace X% before advancing outside of the range. After the retracement, price will move back in its original direction to attempt to break outside of the range. Once the range is broken, price will trade 27.2% or 61.8% beyond the range. For plotting extensions, let's review one more time. Remember, a range from a high to a low or a low to a high equals 100% of that range. The extension ratios that we will be using are the 1272 and the 1618. The 1272 equals 27.2% beyond the range, and 1618 equals 61.8% beyond that range. There are plenty more extensions out there that you can use, but I find these the most effective. Let's begin the plotting process. In this example, we're going to plot extensions to the downside. The line on this chart is highlighting the range that we want to measure and plot our extension from. You want to plot from range low to range high. In this example, price traded to the 1272 extension, then bounced. Now let's look at it in the reverse direction. The line here is highlighting the range that we want to plot our extension from. Plot from range high to range low. In this example, price reversed at the 1272 extension. You may be wondering, how do you identify which extension is actually going to be the target? The red box is the range, and we want to buy a pullback if this range is broken. So we plot our extensions. Now that we've plotted our extension, how do we identify which extension price will stop at? Will it be the 1272 or the 1618? The only way we can identify which one is by using market symmetry. Plotting market symmetry is the most powerful tool you can use because you are plotting past market data. As you can see, market symmetry identified the exact extension price would stop at and reverse. For more information on how to use market symmetry, check out my YouTube video that is dedicated to this topic. Please remember, extensions are areas of high interest. They are also a forecasting tool, and they can signal an overextended market. They are also great profit targets if you're already in a position. Here are some rules to consider. If you enter a trade before the range is broken, you need a candle close outside of the range. Once this happens, trail your stops up to the 1272, your first profit target. The 1272 is a level where you can cut your full position or take half your profits and hold the rest. If you get a candle close above the 1272, price is likely to move to the 1618. Take your full profits at the 1618 extension. Now let's take a look at extensions in action.